Hello and welcome to Currency Call. I'm Manisha Gupta, and the Indian rupee has started the new year on a rather dismal note. Scattered demand for dollars by oil importers has pushed the rupee lower today in the markets. In 2011, the rupee was worst performing Asian currency, down nearly 15.8%. Worsening current account deficit and uncertain global economic outlook is something that's threatening to further push the rupee lower in 2012. But markets are hoping that the RBI will step in and aid the rupee when needed. Rupee on your screens, 53.12 is holding. So we've come back a bit from the kind of lows that we started the day with. Let's go across then to Pramit View. He is CEO Alpari Financials, and he joins us in the studio in Ahmedabad. Pramit, hi, welcome to the show. Most of the global markets, of course, are shut, and Indian rupee today has opened on a slightly weaker note, especially about the deficit in India. How are you looking at that picture?
Yes, as you said, 2011 was the very bad year for rupee, and we do not see any sort of change in the first quarter. Budget deficit, the deficit is definitely an issue with the Indian rupee, and how RBI is going to cope that there will be very important role. But we do not see any drastic action there where we can see any drastic change coming in the rupee situation.
How about the rupee, range now? Because the first quarter of 2012 has seen a very varying report or levels coming in from the international markets, the Indian markets as well. 53 is something that has been holding for many sessions now. What's your range for the first quarter?
If you look at the technical side of the dollar-rupee movement, MACD is about the 20 and 50 days average, which means the rupee can float in the range of 50 to 40 to 55.1. which is a very broad range, and we are somewhere in the middle of that. So I would say that rupee will be under pressure in the first quarter of the calendar year, and we do not see any policy related changes coming in at least the first 2 months, keeping the political conditions and the elections in the various states in the mind. So anything what we can expect from the policy related will be around the budget time, so that will be in the month of March and by end of the March. So at this point of time, rupee will remain under pressure for the first couple of months.
How about the international cues? Today, of course, most of those markets are shut, but how are you looking at the euro? Because we've closed the last year 3.5% down for the euro, and markets are expecting 2012 to be another slack year for that commodity, or currency rather.
I would say euro is definitely going to remain under pressure, but the steps taken by the European countries will determine that how euro will fare out over the period of time. I would say that it seems that euro can be at the level of bottoming out, and we can see that it can recover from that. But if it breaks 1.28 levels and go below that, then there will be a bad start for euro. But at this point of time, I don't see that euro will be in that position.
How about the dollar index? Because that has gained for a second straight year, with 2011 posting meager but 1.5% off, a positive one coming in for that one. How are you looking at a start for 2012?
I would say that dollar index will remain more volatile and floating between the range of early 70s to 80 range kind of a thing, depending on the how European market is resolving the issues, and whether Japan is going to remain strong or Bank of Japan will let the yen free flow again. But overall, I think that dollar index will remain under pressure, and the non-dollar currency will start doing better in 2012.
Pramit, we saw commodities sell off in the last quarter of 2011, and that was weighing onto the commodity currencies as well. Both New Zealand dollar and Australian dollar have closed 2011 on a negative note. How do you look at these currencies? Again,
the global recovery is the major issue at this point of time. If you look at the Indian currencies or emerging market currencies, the pressure is coming from the two sides, on the domestic economy, but more than that, for the commodity currency, the pressure is coming from the global recovery. If we see a global recovery, then the commodity currencies will do much better than what it has performed in 2011, depending on the demand generated from the global economies, especially in the European market and the US market.
Pramit, one final question on the safe currencies, and the Japanese yen and the Swiss franc were gainers in the first half till those both central banks took lots of steps, and even then we've seen both these currencies close the 2011 on a positive note. How do you see 2012 faring for them?
I think that for yen the story will remain the same thing, that Bank of Japan will keep coming back and intervening until US dollar stabilize, because yen has a better role to play compared to Swiss franc. It's a bigger economy compared to Swiss economy, and it's a commodity based economy where there is a consumption, because Swiss franc is more of a safe haven and there is not bigger role from the Swiss economy in the global economy arena. So I think that the Bank of Japan has to keep performing their role of intervening over the period of time. With Swiss franc, any possibility in the stability of Eurozone will allow them to unpack the currency, and then they can have a free flow of the currency. But I would say that Bank of Japan has a hard time ahead.
All right, Pramit, we'll let you go at that. Thank you so much for joining us. So that's the view coming in from Alpari. Indian rupee might see a range between 52.5 to 55. You might see euro bottoming out, and as far as the commodity currencies are expected, they might see some more strength going forward in 2012. With that, it's wrap on this segment of Currency Call. Thank you for watching.